welcome to the Deep Dive. Today, we're really digging into a mix of recent financial and economic news.
Yeah, trying to connect some dots.
Exactly. Think of it as, well, your way to grasp the key developments without drowning in data.
Mm-hmm. And our starting point today is an analysis we saw over on YouTube. Bernardo Garcia Finanzas Personales. He pulled together reports from, the big names.
Right. Bloomberg, Yahoo Finance.
And the Los Angeles Times, all centered around news from about May 22nd, 2025.
And our goal here is really just to pull out the most crucial bits for you. We're looking at potential stagflation warnings, a big tax bill moving through Congress, Bitcoin's massive jump, and some interesting company news, too.
Right, trying to give you clarity on what matters in that bigger picture.
Okay, so let's jump in. First up, these concerns about stagflation. Jamie Dimon, JP Morgan's CEO, seems worried. What's driving that?
Well, it's not just one thing, according to him. He's pointing to a significant geopolitical risks, which we all see.
Yeah, definitely.
Plus these large government deficits and inflation just kind of sticking around.
Persistent, yeah.
Exactly. Persistent inflationary pressures. So it's that combination that makes him think the U.S. isn't really in a sweet spot right now.
Not a sweet spot. That's quite a statement. It sounds more complex than maybe just one issue cropping up.
It is. He mentioned geopolitical uncertainty, the deficits, and the inflation. It's the mix.
Okay. And he also mentioned the Federal Reserve, taking a cautious approach, like wait and see.
Right. The Fed's in a tough spot. I mean, the economy on the surface looks okay, still solid in ways.
True.
But there's so much uncertainty about government policy, like potential tariffs, and how that might ripple through things. So they're pausing, watching.
Balancing act, then. Inflation versus slowing growth, plus all these unknowns.
Precisely. It's a tricky path to navigate for them right now.
Okay, let's switch gears to policy itself. This one big, beautiful bill, the Republican tax bill, it passed the House.
It did pass the House, yes.
Yeah.
Now expected to go to the Senate.
And what's in it? It sounds large.
It is. We're talking proposed tax cuts around $3.8 trillion. Yeah.
A big piece is extending those 2017 Trump tax cuts. But it also gets rid of tax credits for EVs, electric vehicles, and renewable energy.
Interesting shift there.
Yeah, and there's also about $150 billion earmarked for the Pentagon. Some reports suggest that could potentially cover things like mass deportations or border security funding.
Okay, $3.8 trillion in cuts, plus spending. How? How is it being paid for? Did the sources mention that? That sounds like a deficit concern.
Well, that's exactly the market's worry. The sources we looked at highlight nervousness because there aren't clear funding sources laid out. So the fear is this could significantly balloon the deficit, which is already pretty high.
Right. And politically, any sense of its chances?
Well, House Democrats were completely against it, unanimous opposition. And even in the Senate, Republican support isn't guaranteed. It's uncertain.
Okay. And I think I saw that bond yields were rising around the time this bill was moving forward. Coincidence?
Probably not a coincidence. It's likely linked. When you propose huge tax cuts without saying how you'll pay for them, markets usually expect more government borrowing.
More bonds issued.
Exactly. More supply of bonds means investors often want higher yields to buy them. Plus, bigger deficits can spark inflation fears, which also pushes yields up.
Makes sense. Okay, let's pivot to digital assets. Bitcoin. Huge news there. Soaring past $111,000. What's behind that?
It seems like a few things coming together. One is definitely growing institutional demand, more big players getting interested, putting capital in.
Okay.
Second, there's a perception, at least in the crypto world, that former President Trump might be more supportive of the industry.
The political angle.
Yeah. And then maybe quite significantly, there's a stablecoin bill making progress in the Senate. That hints at clearer regulations down the line.
Regulatory clarity.
Yeah.
That usually helps, reduces uncertainty.
Definitely. Less uncertainty often attracts more investment.
And we can't ignore Michael Saylor, right? MicroStrategy just keeps buying more Bitcoin.
Absolutely. His strategy of just constant accumulation, now over $50 billion worth, that sends a really strong signal of conviction. It almost creates a sense of scarcity, too.
Yeah, you can see how that fuels sentiment. And it wasn't just Bitcoin moving.
No, the sources noted a general lift across smaller cryptocurrencies, too. A broader positive feeling in that space, it seems.
Interesting. Okay, let's move on to some specific companies making headlines. Nike is going back to selling on Amazon. They left a few years ago.
They did. They left back in 2019. The idea then was more control over their brand, strengthening ties with key retailers directly.
Right, focus on direct-to-consumer and select partners.
Exactly. But it looks like they've decided the reach of Amazon's marketplace is too big to ignore now, maybe prioritizing sales growth and wider access.
And the market liked it. How did the stock react?
The stock got a pretty nice bump, yeah. Investors seem to think it's a good move, potentially boosting revenue.
Okay, speaking of boosting revenue, huge news from BYD, Build Your Dreams. They actually outsold Tesla in electric vehicles in Europe in April. First time ever.
That's right, a major milestone. And the growth is just staggering. Their EV registrations in Europe were up something like 169% year over year.
Wow, 169%.
Yeah, it pushed them into the top 10 EV brands in Europe. They're really making inroads, launching affordable models like the Dolphin Surf in Spain, especially attractive with local incentives.
And Tesla.
Tesla's registrations in Europe actually fell quite sharply in the same period, almost by half.
So real competition heating up there.
Definitely shows the European EV market is getting much more competitive.
Okay, sticking with global trade impacts. Canada Goose. How are they handling the U.S. tariffs? Seems like less of an issue for them.
It appears so. Their supply chain seems set up pretty smartly. About 75% of their stuff is made in Canada.
Ah, so USMCA helps? The trade deal.
Exactly. Under the USMCA agreement, those Canadian-made goods are largely exempt from the U.S. tariffs. Shows how important those trade deals and where you make your products can be.
Good point. Let's shift focus now to China and a different sector. Travel retail in Hainan. Stellar, a company operating there, is seeing a downturn.
Yeah, Hainan became this huge duty-free shopping hotspot during the pandemic, when Chinese consumers couldn't travel internationally.
Right. I remember.
But now that travel retail sector there is in a 14-month recession, according to the reports. Duty-free sales are down significantly.
Fewer shoppers, spending less.
Both. Buyer numbers down, spending per buyer down, over 25% declines in some cases. And that's hitting the big global beauty giants like Stella Lauder, Shadow, L'Oreal that relied on that market for growth in Asia.
Raises questions about whether that pandemic boom was sustainable long term.
It really does. Consumption patterns shifted dramatically then, and now maybe they're shifting back or normalizing.
Okay, quick updates on some tech names. Palo Alto Networks, their stock dipped. Something about their forecast?
Yeah, they gave a revenue forecast, but apparently it didn't quite ease worries investors had about their growth rate slowing down. Maybe it was at the lower end of what analysts were hoping for.
Got it. But better news from Zoom Communications.
Seems so. They reported enterprise customer revenue that beat estimates. That suggests their push beyond just basic video calls, selling a wider suite of tools to big companies, is working.
So growth in that key segment.
Right. Diversifying their business seems to be gaining traction.
And Snowflake also sounded positive. Strong sales forecast.
Very strong, yes. They issued a positive outlook after launching some new products. They're expecting product revenue to jump about 25% and raise their forecast for the whole year.
Okay, good signs for them. Now this is interesting. Amazon CEO Andy Jassy, he said they haven't seen a big hit from those tariffs implemented earlier in the year.
That was a key comment. Jassy basically said consumer spending on Amazon hasn't dropped off significantly, and they haven't seen major price hikes directly because of those tariffs.
So maybe the impact on consumers, at least through Amazon, isn't as severe as feared.
It suggests that, yes, at least for now, demand seems stable on their platform despite the tariffs.
And one more company, Advance Auto Parts. Big stock jump.
Huge jump, yeah. Over 20% after they reported quarterly results that beat expectations. So much stronger performance than the market anticipated.
Okay. And the sources also touched on upcoming economic data and just general market feeling, right? Lots of different signals.
Exactly. Futures were looking a bit better after the previous day's drop, which was partly tied to those deficit concerns we talked about.
Right.
Bond yields were still creeping up. The VIX, the volatility index or fear gauge, was down slightly along with oil prices, and the U.S. dollar was stronger.
So a market trying to process everything, the policy, the company news, the economic outlook.
Yeah, lots of cross currents. Investors are clearly weighing all these different economic and policy signals and adjusting.
So if we pull it all together,
Yeah.
we've covered Dimon's stagflation caution, the potential fallout from that big tax bill, Bitcoin's record run, and then all these individual company stories, from Nike to BYD to Amazon.
And it really highlights how interconnected everything is, doesn't it? Macro warnings, policy decisions, crypto trends, specific company performance.
Absolutely. And for you listening, understanding these pieces, the big picture risks, the policy shifts, how specific companies are navigating things, new trends like EVs in Europe, It gives you that richer context.
It lets you interpret the news flow more effectively, think more critically about what might come next for the economy, for finance.
So here's the final thought to leave you with. We have these contrasting signals, right? Jamie Dimon's caution about the U.S. economy versus Amazon seeing stable demand. Then you layer on potentially huge policy changes like that tax bill. How do you think these different forces might interact or pull against each other in the coming months?
Yeah, will they converge somehow or pull the economy in different directions?
And maybe more importantly, what specific indicators should you keep your eye on most closely to get a real sense of where things are truly heading? Something to mull over.
Definitely something to think about.
Thanks for joining us for this deep dive.